Can you keep maintaining 22% margins when you're trying to compete with Amazon and Walmart?
Well, the margin growth this quarter was fueled by several things. One, a very strong quarter for our brands, which carry a higher margin. It actually softens the top line a little bit because the retail price per item is a little bit lower. But the growth in units of that and the contributions of the margins was quite strong. We also have a lot of mix going on where folks are buying larger packs at a slightly higher price point, and those often carry a little bit better margin as well. A lot of people converting from traditional products to natural and organic products, which also has a little bit better help on the mix line as well. And the last item in there is we've been very diligent about making sure we partner with our CPG partners on getting the right cost of goods, and you're seeing all of those come together and flow through the income statement. I wouldn't predict where it would go in the quarter, but we like the mix of what we're seeing today.
So how do you deal with the pressure from discounters? And I mentioned Walmart and Amazon. You're getting squeezed from both of those sides. Plus, you have other areas, other companies that are entering the U.S. market. Aldi, for example, is expanding, and they're pressuring the discount there as well. How do you manage that?
Well, our 450,000 associates wake up every day with one thing in mind, and that's to give a great shopping experience and a great value to our over 9 million customers that we have every day. And when we wake up and we do that and we have an undying focus on our customer, knowing what they want, knowing the price points they want, knowing the assortment and the selection they want inside our stores, knowing whether or not they want to shop online and pick it up at the store or come to a brick and mortar place. We're really trying to address what the customer wants and needs. We've been around for 134 years. We've seen everything in those 134 years. And any company who just stands still and doesn't change wouldn't be around 134 years. And one of our core strengths is we're continually changing and adjusting to the marketplace we operate in.
Hey, Mike, Jonathan here. How's the convenience store sales going?
Well, as the process is unfolding, there's been a lot of demand in it, and that's about all the update I will get. We've been very happy with the demand we've seen for the asset. I want to remind the folks from our convenience store business how much we appreciate their diligence and the value they've created inside that entity, and how much we appreciate them every day as we go through this process.
Certainly the investor, the shareholder, placed their vote on the news. They seem to like it, Mike. I'm just wondering, what kind of time horizon have you got on the table to get this done?
Well, as we come into the holidays here this month, I don't think we would see anything, a transaction that gets signed until after the first of the year. And then depending who the winner of the process is, that'll determine what kind of process there will or won't be with the FTC. So I would say it'll be early next calendar year, maybe even into our next fiscal year. But it would certainly be early next year that this will wrap up.